So I just wanted to make a quick video talking about the 13-week downtrend that we are currently witnessing over on Bitcoin, the total crypto market cap, and the total altcoin market cap. Now, you may be looking at this Bitcoin chart and saying, we have basically been going down in a straight line for the past 13 to 14 weeks, but we haven't had 13 weeks of solid red movements to the downside. You might be looking at this and thinking, well, we haven't had 13 weeks of bearish momentum, because when you do look at the chart, you do notice that there are these three prominent green candles that do stand out from this sea of red. Within each of these green weekly candles, you can see they are short-lived. They last for a week or less, and subsequently towards the end of the week, you will notice they are pushed all the way back down to the base, and you get these big blow-off wicks to the upside. So what am I talking about then? How is this a 13-week downtrend? Well, the best way to take away the noise from these slight swings back to the upside, the best way to delete any noise of any dead cat bounces is to switch from the Japanese candlesticks over to the Heiken Ashi candlesticks. And we're going to be doing this for Bitcoin, Total, which is the total crypto market cap, and Total 2, which is once again the altcoin market cap. So I'm not going to have an in-depth explanation of how Heiken Ashis work, how they're calculated, but I will say these are very great for characterizing uptrends and downtrends. For example, at this moment in time, you can see we are in a sea of red. This perfectly characterizes the market sentiment and the market, how it's acting at this moment in time. However, when we switch over to the Japanese candlesticks, you'll see there are tons of fake outs here, there, and everywhere. But once again, you switch over to the Heiken Ashis and it does take away from those downtrends. Roughly how they're calculated is they open approximately halfway through the previous candle body. It's not as simple as that, so if you do want to know everything you do need to know about Heiken Ashis, be sure to head over to my channel, click on playlists, click on the educational series, and scroll down and you will find this video, how to Heiken Ashi candles. That will explain everything you need to know. I've got 25 videos in this educational series, but nonetheless, let's jump right into today's video. So when we do switch the Bitcoin, total crypto market cap, and total altcoin market cap over to the Heiken Ashis, you will notice that since the week commencing the 11th of April, marking, we can count these if you want, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13 weeks so far that we've been getting absolutely brutalized to the downside. And this is a first for Bitcoin. I'm currently on the Bitcoin all-time chart, which basically goes all the way back to its inception, and we've really never had anything too close to this. You can see, I think this was the second worst that it's ever been, and from the start of this trend, from here to here, you actually had 12 weeks worth of bearish momentum. So, the fact that we're currently putting in our 13th week to the downside definitely shows you that Bitcoin has been getting battered for the past couple of months worse than it has before. So why do I show you that we're in a 13-week downtrend? It's to simply say in a short and concise video, do not try and catch the falling knife. There has been tons of YouTubers, I see it all over my Twitter, the Moon Boys have a new hopium trend line every single week, and once that trend line gets invalidated, previously people were talking about this. They were talking about this fractal over here, and I even mentioned the fractal myself, but I said I didn't think it was going to hold up. We were talking about this fractal that looks exactly the same as this, and people were saying, this is the trend line to hold. As soon as we broke it, everyone was saying the 200-week moving average, we have to come down, we back test it, and then the bottom is in. And then I've seen people having like a mega trend line. I can't remember exactly how it was, but people were drawing, I think it was on the log scale, people were drawing something like this, like a trend line that was like lasting forever, and once again that's been invalidated. There is a new Moonboy hopium trend line every single week, and week after week after week they are getting battered to the downside. Everyone's trends, everyone's predictions, if you've been bullish for the past couple of months, everyone's been getting wrecked. I really do think now is the time to sit on the sidelines. And what is the worst thing that would happen if you simply wait for a green switch of the Heiken Ashi candles towards the bottom of this market structure? This is what I want to show you. So let's take it back a step. Let's go back to Bitcoin's 2018 capitulation, when it basically came down towards the end of December and found its bear market low. You can see we did actually have a green fake out week over here, but on the Heikonashis we had 1, 2, 3, 4, 5, 6 weeks to the downside. We came down to $3,100. That was our approximate bottom. And you can start to see, as soon as we started putting in these green Heikonashi candles, that was when the trend changed. How do we know that's when the trend changed? We were going down, 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 down. We formed the all-time low, or the bear market low. We W'd out. We came back down, back tested the 200-week moving average, making a higher low formation. And we W'd out of this market structure. You can see as well, if we do switch over to the Japanese candlesticks, it looks a little bit different because we had... This broke out on the Japanese beforehand, but you can also see, it broke out here as well, so you wouldn't have bought the bottom down here, and you were actually closer to buying the bottom if you bought the Heikonashi breakout. And this is really what I'm waiting for. This is another metric that I think is going to be absolutely amazing to help show us when the trend is starting to subside. And once again, the reason why we use Heikonashi candles is because they open approximately halfway through the previous candle body close. I'm saying approximately because it is not that simple. However, if you do look at the chart, you will see that almost to the teeth, they open approximately halfway through the previous candle body close. And why is that important? Why would we measure our candlesticks like that? Why would we not just want to draw them from the opening to the close, opening to close, opening to close? Well, the reason for that is because when you're in a downtrend, if you open on the weekly time frame halfway through the previous candle body, it takes a lot more momentum back to the upside to switch into a green candlestick. And that is why you notice when you look at the Japanese candlesticks, which just incorporate the open and the close. That is all they do. So this is where it closes, this is where the next one opens, this is where it closes, this is where the next one opens. And because of that, you see these fake outs time after time again. If you were judging where the bottom was on the weekly time frame after the final capitulation, you would have been buying the weekly candle body close at $4,100. However, if you switch over to the Heikonashis and waited for the green candle body close, the first week we solidified a green uptrend, you would have bought when this closed at $3,900. What does this mean? From a percent increase from the bottom, this means you would have missed out on the first 25% of the uptrend. Boohoo, right? The bottom was down here at 3,100. You would have bought at 4,000 or 3,900 rather. I don't know many people that would be complaining if they bought, $3,900 Bitcoin and then rode this up 1,665%. So once again, we're pointing out the 13-week downtrend to let you know that we are in a bearish market structure that has not been witnessed in the cryptocurrency history before. I really want to make this short and sweet and not go into GDP growth and all the the GDP growth, the FOMC meeting, the CPI reports that are going to be coming out in the next month. If we do have negative GDP in the next month, we are going to be in a recession. And this is why we are seeing, bearish market structure that we've just not seen anything like before, and this can continue to move to the downside. So if you do want to keep up with the GDP growth, if you want to know like that when we are in a recession, if we do confirm that, be sure to follow my channel because I will be updating you on that. But once again, it doesn't matter whether we're looking at Bitcoin on the weekly time frame, it doesn't matter if we're looking at the total crypto market cap, which is also in a 13-week downtrend, and the altcoin market cap, which is also in a 13-week downtrend. I definitely advise you, when in doubt, zoom out, look at the higher time frames, switch over to the Heikonashis, because once again, people have been getting suckered into these pumps after pumps. When you look at the Japanese candlesticks, it is riddled with fake outs week after week after week. And what do you notice about these fake outs? Every time you have one up here, then you have one down here, and then the next time you have one down here. Every single time you have a weekly fake out on the Japanese candlesticks, it is just a fake out, and the next week comes back and you get slapped back down to the downside. So when you look at the Heikonashi candles, it smooths out the trend, and you make sure that you're not jumping the gun and buying the quote-unquote bottom, which is not the bottom. It is just a weekly dead cat bounce before you do get slaughtered again. It's going to take more than a 1 week bounce, unless it's a tremendous bounce, to switch this red downtrend into a green downtrend. Am I saying that the Heikenashis on the weekly time frame are the only thing that you should be looking at to find the bottom?
Absolutely fucking not.
You should be looking at a range of indicators. You should be looking at past trends. You should be looking at how the economy is doing. You should be looking at how the dollar's doing. You should be looking at how the stock market's doing, because these are all going to show you when the bottom is likely to be in play. I do cover all of these things on my channel, so if you are new to the channel, if this is your first time watching my channel, warm welcome. Make sure to keep up with my channel, because I will be covering all of these important things. So moral of the story, if you put your hands out to catch a falling knife, you're probably going to end up with less fingers than when you put your hand out in the first place. That's all I've got for you today. Hope you found some value in today's content, and as always, my friends, cowboy out. Peace.